Hello, traders. It is Thursday, the 4th of October, 2018. A glorious day. It's 8:02 a.m. Chicago time, 9:02 Eastern. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market sentiment today is risk off following yesterday's drop. Following yesterday's drop, it looks like we really just had a continuation overnight from the open. Overall, just not able to pick itself off the floor since the drop at about 1 Central, 2 Eastern yesterday. The trend has been solidly down overnight until about 4 a.m. Chicago time, 5 Eastern, and it's been attempting to push higher so far. On the ES, crude is off 51 cents. It's the laggard today, trading at 75.89. Crude's had some really interesting days recently. The Russell small caps have been getting beat up, although yesterday the small caps had a pretty good run up. But today they're off. They're also down 0.58%. They're the second weakest product I'm watching. Euro stocks are off. The leaders today, I wonder if, the DAX is up oddly, 46.5 points. Gold is up $4. The British pound and Japanese yen and US dollar are up. Other than the DAX, the products that are up are safety assets. And so overall, the risk sentiment is off today. It's moving to safety given the action that we saw overnight. So that's where we stand right now. There's, quite a bit, as you're well aware, there's quite a bit that is on the feed. I mean, Fed Chair Powell came in yesterday and said that they need to keep moving rates gradually towards normal. Policy was still accommodative. Rates might get past neutral. That's pretty threatening to the market. Fed's Barkin said policy rate was still below neutral, supported gradual path so long as data complied. And then Fed's Evans, who's a non-voter, said that he sees policy turning mildly restrictive in 2019. So that's where we're at. Yields pushed up higher, and let's not ignore the 10-year yesterday. The 10-year yesterday had a trend day down, big day, big drop, with yields pushing, recent record highs. So that's where we are in terms of overall sentiment. As far as what we're looking for today, we've had initial claims. We get a couple of fairly important numbers at 10 Eastern, factory orders, durable goods. We expect those to have an impact on the auction. Right now, in about 9 minutes, Fed Speaker Quarles is a voter, is going to be speaking. We need to pay attention to that. The market is becoming rate sensitive again. And at 9:30, right at the cash open, we have ECB Speaker Nowotny. And then at noon Eastern, we have ECB Speaker Kerr. So that's what's on deck. That's what's likely to interrupt our process. Here's what we had anticipated yesterday. The primary scenario, I think my eyes are going bad. Just getting old or something. It just sometimes looks out of focus to me, but I guess it's on its highest resolution. The main idea yesterday is we might pull back to 36 or potentially to 32 and see a bounce up to around 50. That did not work out at all. However, the top and bottom for scenario 2 were pretty much dead on. Scenario 2 was looking for a poke through the prior high from 2 days ago. 29.42 was looking for 29.44 or so. I think the top yesterday was 29.44.75. And then we had that push down into the prior range. We had some response there at the 36, but we ultimately went to value low. Value low, as I had mentioned yesterday, is around 25 and a quarter. 25 and a quarter, with 25.75 being the overnight low. And so here's what we actually got. So we poked through that high from a couple days ago. We went to 44.75, consolidated, and then we had the impulse down to value high right there, bounce off of value high. We did not get a reaction once we pushed down. We did not get a reaction at 36 because we already saw the reaction at 36 earlier in the session. And now we push to the point of control. We do get a reaction at the point of control, 4.5 point bounce. And as I've talked about in many webinars and all the material that I put out, we expect the market to consolidate in the point of control area. This is what it looks like in real life. Consolidate, consolidate, consolidate. And then it finally pushes down to 29.25 and a quarter, or 29.25.50. The value low is actually 29.25.50. So we push right to value low. This black line you see here, the edge of the black colored area on the profile. And then from there, we build a high volume node. We end up with a double distribution profile with range extension down, a clear low volume node at 29.36 again. So that stock zone has not moved for some time. We get another low volume node right here with the prior high, with the weekly high, with the MC point of control, and a whole bunch of stuff there. And so that's where we stand. In fact, that MC point of control should be gone. So we end up with a double distribution profile. And it's not an extreme day. It's not a trend day. It's just a double distribution day with the key area remaining right here between 34, and 36. The overnight session. So that's yesterday's recap. It was pretty much scenario 2 on the nose. Here's the overnight session. We reopen and we quickly drop, and we continue to drop, and we have this channel down, and then we broke higher at about 4 a.m. Central, 5 a.m. Eastern, and we have just challenged the mid of the entire session at 22.50. The profile is a B-shaped profile, so you can imagine that this is kind of an ugly B-shaped profile. The market quickly moved to lower prices. It found buyers, weak low, a local double bottom on the low, relatively weak low, and is resting. And this shows us that there's strong potential for long liquidation coming into the session today. Overnight inventories 100% short. Our goal today, this morning, is to see if it'll balance out. So that's really what we're looking at. We are still, when I squish this back, we look at the all sessions here. Let's clean this up. We are basically ping-ponging. So we've had this run up to all-time highs, down, up, down, up, down, up, down, up, down, up, down. And so we are just ping-ponging back and forth in this upper balance. It's not giving up these prices. I'm sure a lot of people are talking bearish today on whatever, CNBC or their blog or whatever. And that's very time frame dependent, but overall, we really haven't given up any territory. The buyers, the bulls, have not given up any territory whatsoever from the all-time highs. Okay, so when we look at what was accomplished on a bigger picture, it's important to keep abreast of what's going on. We have a pivot day, one time framing higher, one time framing higher, one time framing higher, week, one time framing higher, and now we're breaking that to the low side. It seems to have faltered. It seemed to have pushed up, pulled back, tried again to push towards that high, and it seems to need more. It seems to need lower prices to be able to have the energy to really push through. And that's how we have to read it, because overall, we really are just kind of trending upwards, except for today where we might break that. So just keep that in mind. The bigger picture trend is really up, with today falling below. So between now and the open, if it stays below this 29.2550, then the one-time framing up has finished, and I'm likely to press the short side today more than the long side, unless it gets back into range. Okay. So what are we looking at for today's plans? Today's models or scenarios. Open auction out of range below the last 3 days. So the last 3 days, this is the limit right there at 22.50. We are right at 22.50. We're opening out of range to yesterday. Expecting an open auction again. In fact, let me extend this out so we have a proper MC. And let's start this day on the 21st or the 20th. Okay. So this is the MC point of control right down here. So we're likely to have an open auction out of range. I'm looking for the market to be responsive, to potentially bounce out some of the inventory. It can push in as far as 20, I believe it was 29.29 or 29.28 for the high volume node. But I'm looking for an impulse down that gets us down into the MC point of control and a test of this overnight low before we consolidate and revert back. Tomorrow's non-farm payrolls and unemployment, big number for everybody. And so we'll see how the market positions itself on the close. But it has come off. ADP came in relatively strong, and it doesn't exactly reflect what the unemployment report will say. But we do have a major number and some important risk tomorrow morning at 8:30 Eastern, an hour before the market opens. The alternative is the market opens, drifts down, gets into the point of control, attempts lower, impulses up, chops around in the middle, and then starts to drift back up into 25.50, and then it starts to move towards higher prices. The scenario 2, unfortunately I have to draw it off to the side here. Scenario 2 can push as high as 35.36. These prices are lower, and they may entice these persistent buyers to step in and grab some bargains, right? It depends on people's time frames. I'm going to get into scenario 3 simply because we're out of balance. Scenario 3, the open test drive or open drive scenario is clearly much more meaningful if we're opening outside of this balance. But what could happen there is we could open up, reject very quickly. And for this, I'm looking for volume, not only price, but I'm looking for volume. Remember, price without volume is really just a drift. It's a raft that's just being pushed around. It's not really intent. It doesn't show intent, in my opinion. We want to see volume come in. We want to see the delta drop on a strong impulse down? And if so, then I'm going to take whatever I can find in terms of a pullback for it to start attacking the overnight low at 13 and a quarter, continue the move down, and start to push down into 29.07 again, where I'm expecting a small bounce and then potentially a continuation into the 2900 and 2901 down here as far as targets. That's the driving scenario that basically the market is balancing out or flushing out before the non-farm payrolls, or of course, news is anybody's guess. Could sell off, could go up, who knows. Scenario 4 is the opposite, open test drive, open test down, drive up, push to 29.36, chop around, and then continue to the point of control. In fact, I might as well draw it. Again, I'm only considering these because they're out of balance. I don't know what I use for scenario 4, but scenario 4 pushes down, tests down, drive, consolidate, push to 36, consolidate, and then ultimately end up bringing us back to where we were in balance or where we had the most valuable prices yesterday. That was scenario 4. Okay? So, I'm not going to get into this. I'm over my time, but the way you trade these is you simply wait. You wait for the market. You look at which side has expanding rotations, which side has good delta, which side brings in the volume. Who's bringing the booze to the party? I want to be their friend. Think of it this way. And the booze are volume. Okay? The drinks are the volume. So it doesn't matter what direction the market goes in. We want to see that it rotates well with volume. Good luck. Mind your risk. This is an environment where you could lose a lot. Mind your risk, and I'll catch you tomorrow. Take care.